Apple takes aim at crypto, and Coinbase is leaving the U.S. Question everything, trust nothing. Welcome to Debate Crypto. It's your boys, Keeper and Crusader, and it is a Tuesday. Tuesday has been a day that has been absolutely boring for me so far. Crusader, what is going on with you, brother? I see you got that fresh beard trim, trying to keep up the boy over here. You got yourself all cleaned up, looking good. Got the hair cut. I like it.
Trust me, man. I don't like looking this good and throws the world out of balance.
It's hard looking this good. You heard it here first. Debate Crypto having a hard time looking so good over here. If you think we're looking good, smash the like. If you don't, smash it anyway, because we need it. Hopefully everybody is doing well. Let's jump into the chat real quick and say hello, and then we'll see what's on the podium. I want to give a big shout out to Puddles. Puddles was first in, and Puddles must have logged in at about 6 a.m. this morning, Crusader. I think actually he was waiting for the we woke up, he rolled over and just logged in. No, he actually did say hi like 30 minutes early or something like that. So Puddles, shout out to you, brother. Appreciate all the support as always. Brett, unforgettable name. Kenton says, what up, DCA fam? What's going on, brother? Glad to see you. Who else we got up in the house? FU. And no, again, that's not what I'm saying to everybody. Just letting you know his name. Mr. Evanchick in the house. And yeah, that rounds it out. Well, we got Jimmy with the Stimmy. I still like that name. And then Burke as well. So hopefully everybody's doing well. Let's get into it. Crusader, what's on the podium today? We've got like 7 different things that we're going to be touching on. Let's see how many of them you are able to remember off the top. What are we talking about?
We're going to be covering, obviously, the most obvious. Apple becoming a bank, right? Yep. Producing APY and what that means for the crypto space and what that means for the banking system in general. We're going to be talking about Bitcoin back over $30,000. We're going to be talking about Gary Gensler in the hot seat today. We're going to be talking about Arbitrum, some good, maybe possible decent news going on for Arbitrum out there. And we've got what was the other thing that we had? We had the
we got some Tornado Cash news.
That's right. Regulation out there in Tornado Cash land and in the EU with Polygon putting the forefront for some good regulations on DeFi.
I'm actually pleasantly surprised with the memory on that one, bro. I can't remember what I had for lunch half the time, and you got just about the whole lineup. So good work on that.
Less hair now. Less hair, more mental capacity.
More mental capacity. That's right. The tinfoil that you need to put on for some of the things we talk about will be less now.
It was getting tight, dude. It was too much hair in there. It was getting tight.
I saw some Facebook pictures, I think, recently, and I said, my boy's hair is getting long, and then all of a sudden it's gone. All right, crypto fam, let's dive into it. Let's start off, as always, let's check out the crypto market caps and see what's going on there. We have the global market cap at 1.27 trillion with the T dollars. That's up 0.98%. Bitcoin, as Crusader alluded to earlier, or not alluded to, he just flat out said it, we're above 30K. We're at 30,198. Round of applause there. ETH staying down below 2,100. We're at $2,082, but again, still up 9.3% since the Shanghai upgrade. So glad to see that. Rolling on down through the rest of the top 10, pretty flat. Dogecoin up a couple percent. XRP fam put them up 1.61% at 51 cents. Little side note, this is probably old news to just about anybody and everyone, because I don't do centralized exchange stuff. I just randomly accidentally clicked on Coinbase this morning, and there was like money in there. And I was like, well, I don't really keep stuff on exchanges. And then I realized that I had been complaining for a while that I never saw my Flare airdrop. Well, apparently, maybe, I don't even know how long it's been since I've been like actually on Coinbase to check. But at some point.
Well, it came out like last week.
Oh, it did. It just came out last week?
It just came out.
Oh, okay. So I had been waiting for it. I thought because it had been pushed so many different times. I didn't even know when it was coming. Then I thought maybe my dumbass made a mistake and, did something wrong. But yeah, so if you haven't already checked, that Flare airdrop, at least for me, had came through.
Dump it.
Dump it. I was thinking the same thing. Dump it. So that was
you get free money.
Heck yeah, that's part of the problem with a lot of the ICOs, and that had been a problem. Now they've got some features we're not going to get into today, but where they effectively can kind of drip is what they call it over the course of a couple of years. It's pretty cool how they can kind of slow down some of that price action from just falling off of a cliff. All right, Crusader, what are the charts telling you, my friend? I'm itching to put in a trade. So tell me, Crusader, what should the trade look like? And never giving financial advice here, Crypto Fam. Just here to look at the charts.
So once again, like I said, right, this 32,000 key level of resistance right here. We haven't even been able to make an attempt at it just yet, but we're still hugging this heart line of this regression trend. So we're still moving up and to the right, right? We're having these little bit of slumps. Our RSI took a nice little dip with yesterday's candle, came back down to 58, almost neutral level, and now we're moving back up, right? We had to bounce back real quick here on the daily, and dude, overall, EQ Cloud, things are still looking bullish. Nothing's looking too aggressively bad for Bitcoin right now. I mean,
Yeah.
things are just looking good. Let me take a shorter time view of these pivots. Let's look at the weekly here.
Good Lord.
So here on the weekly, yeah, 31,000, dude. It's we're holding the point of control. The pivot right here at 29,850. We're right on it. We came below it, came right back above it. So we're holding this. And 31,000 will be the next weekly resistance. And then obviously on the monthly, it's that 32,000 that hits the top end of the regression trend.
Yeah.
But everything's looking pretty good.
We're going to look into, and actually we're going to start there with Bitcoin for sure here in just a second. I want to throw out there, if anybody's going to be in the Austin area next week, Consensus is next week. I'm going to be down there. Crusader's not going to be with me, but make sure you come up and say hi. I think we're going to run into Biomex, maybe grab something to eat. But if you are in the area, let me know. I'd love to say hi. All right, cool. Let's start with Bitcoin. Bitcoin is mirroring, and this is what Crusader was just alluding to, was it's mirroring kind of 2018. We're making some moves here, okay? Bitcoin is mirroring 2018 bear market recovery. This year's Bitcoin rally bears an uncanny resemblance to the 2018 bear market. And I agree after kind of looking at some of this. The price of Bitcoin is even clawing back losses in a similar fashion. It sank from 20K, I remember this like it was yesterday, to less than 3,200 in 2018. 84% drawdown. That was the numbers I heard BitBoy and a lot of people talking about all the time, was that 84%. And that was what they were expecting moving forward into the next market. So late 2021, Bitcoin dropped to 16 from 69K. That's 78%. That's really freaking close to what it did before. So both cycles lasted for about 370 days, and recovery trends were identical. 60% returns in 510 days. Now, here's where it gets interesting. So if the bear market ended after 556 days from the 2017 peak with a 34% decline, then Bitcoin could muster a rally to 45K by May 20th, which would be a 50% jump from here. That's obviously if we see the same.
32 days.
That's a big move. That's a big move. But I think there's a really good point here. It says committed long-term hodlers are still unwilling to sell at a 60% drawdown from the previous peak, and they use these periods as accumulation periods. They are citing two things: the banking crisis and increased utility. So let's start there. The banking crisis and increased utility. I've been talking about the next bull run being utilitarian. Been talking about that for a little while now. I do believe that. I believe Bitcoin is being utilized. Talk to me about the banking crisis, Crusader. Why has this been such a good thing? Or it would appear to be, at least recently, been a good thing for crypto and for Bitcoin.
Yeah, dude, it's this banking crisis is the poster child of why Bitcoin exists, right? Financial freedom, financial sovereignty from what the banking system, and other shenanigans, other fugazi practices that are not they're not sustainable. They're only propped up by the fact that they keep printing money. That's the only way these banks stay in business. If not, they'd be out of business a long time ago. And at the same time, they're just cashing themselves out and making money hand over fist while everyone else is getting screwed. So, everyone, like I said before, everyone was worried about this recession coming with Bitcoin. Like, oh, Bitcoin's never been in a recession. Well, it's showing, right? Yeah. Banking crisis, recession, whatever it is, Bitcoin is standing strong, been more stable than ever. And just increasing over 100%, give or take, since its all times low in the worst times possible. And people believe that the banking crisis is over because we saw 2 or 3 banks go down, 2 months ago, and then that's it. It's silent. It's over. Well, let me tell you, this thing's gonna last longer than the fog around the world did. It's gonna continue happening. We're gonna see more banks go down, and the only reason why we haven't is because since they started going down, they undid over 12 months worth of work by quantitative easing, even though they don't call it that anymore. But they literally printed billions of dollars to be able to prop up these banks. And they came out and said, hey, every bank is going to be FDIC insured. Don't worry, there's no limitations.
Yep.
That's the only reason why we haven't seen it happen faster.
Yeah, I agree with you. I think it is going to extend out. I think we are still going to see some pain. I think a lot of people have talked about this. Crusaders suggested, hey, could we possibly see a super cycle? But the reality is also on the other side of that, there's a lot of people talking about the fact that we could see a big run here coming up, that big move like 2018, and then get a big dump again. So I've just been trying to encourage people to just hang on for the ride. We're never here to give you financial advice, but we've been through some of these rides before. You kind of get numb to them. And depending on what your position is, if you're not a short-term trader, if you are a short-term trader, you can take advantage of that volatility, obviously, right? You got to be paying close attention to the charts, have some sort of a game plan. We're going to be doing, we've been talking about it for a little bit, but we're going to be doing an introduction into trading with Magic Internet Money. We're going to be selling seats to that here shortly. Looking forward to that. But if you're the long term, the mention in the article is that people in the long term position, my position, Crusader's position, probably a lot of people in the stream don't want to sell at a 60% drawback from the all time high.
I mean, dude.
So they'll stack.
Yeah, I mean, it's not even just a 60% drawdown, right? You're talking about, you've also mentioned this before, right? Another drop, like we could go all the way to 45 and drop again. No, nobody has a crystal ball. Always go back to the same point, which is, what are we going to be going out to, right? Why are they going to be cashing out into fiat when the US dollar is right now on the verge of world reserve status, right? Mr. T came out and said, hey, that's the equivalent of losing a world war, right? So like, what are we going to be running to? I don't see how people are going to be running out of these cryptocurrencies. Let's say just Bitcoin in this example, right? Financial freedom, financial stability, wealth preservation and creation into what? You're going to go buy yuans? What are you going to go buy? What other asset are you going to put your money in times of turmoil right now? Because times are tough right now. Inflation is still going up. Even though it's not going up higher, inflation is still happening every single month. And with the dollar's problems and what's happening, what are people going to put their money into?
Well, we're going to talk about it a little bit later, but Apple is trying to encourage you to do something with them. I will say that they are definitely encouraging and pushing hard, and they're pressing against effectively crypto. We'll get into that a little bit later, so stick around. We've got some really interesting information on that. I'm excited to hear. This next one's fun. This is kind of a short article, but I thought this was interesting. Crusader and I were talking about this earlier. Safemoon hacker strikes deal with developers to return 7.1 million. So I look into this as this hacker exploited Safemoon. He or she has agreed to return 80% of the stolen funds valued at 7.1 million, according to on-chain data posted by Twitter user Safemoon Spidey. The exploit occurred last month when a hacker drained the Safemoon liquidity pool of nearly $9 million worth of Safemoon tokens after manipulating a flaw in the smart contracts. Check this out. This is where I think this is interesting. The two parties agreed on a 20% bug bounty to be awarded to the hacker. So the developers also confirmed that no charges will be filed. So listen to this brilliant scheme to where it pays to be a criminal. Okay. So homie sits down and he says, hey, I figured out a flaw in this smart contract with Safemoon. So here's the plan. I'm going to rob them of $9 million of liquidity. Then I'm going to send them a message and I'm going to say, hey, listen, I took $9 million worth of your tokens, $9 million worth of your tokens. I don't really need all 9 million. And I also don't want to get in trouble. So how about this? I'll keep 2 million. I'll give you back 7.1 million. And I'll tell you how I did it and effectively show you what the bug in your smart contract was. Deal? And they said, deal. So I think it's a really interesting, I wonder if that's genuinely how the thought process was, or if the person, like we've talked about before, took 9 million and then said, oh crap, I've got $9 million worth of Safemoon that I have no idea how the heck I'm going to get rid of any of this or move any of it. Are they going to blacklist my token? Like, what's going to happen here? And then kind of stressed out and then made the move. Or I wonder if there was foresight there and said, you know what, if I steal enough, I'll get their attention and then I'll just give a bunch back and I'll become, you know, I'll make a couple $1 million in the process. What do you think they did?
I think there was some foresight. I think there's a lot of these companies put out bounties and they know that it's for millions of dollars, right? And I think you know, usually they all get paid out. I don't think there's any shenanigans or anything around that. But just in case there is, and we haven't heard of it or we're not aware of it, maybe this guy was aware of it and said, you know what, I'm gonna take it and then I'm gonna tell him about it and then I will get paid. That way I can avoid the shenanigans. And at the same time, I'm clean, right? I'm saying, hey, I'm working on their bounty program. I wasn't doing anything illegal. I was just doing what they were paying out to do.
They're saying they're not going to charge him. And I think, but that the thing on the front end, if he didn't have the thought process on the front end to do it the way that he did, they probably do have a bug bounty, but I guarantee you it's not $2 million to exploit a smart contract. It was the sheer amount that he or she took and then negotiated it. It's not like, you know, Safemoon's like, hey, anybody exploits our contract, $2 million. Like, not a freaking chance.
It's about leverage, bro. I got all the money. I'm gonna take
that leverage. That's right. They put the leverage up to 100 and put the screws to them. So it's just an interesting thing that you will see in crypto with these bounties, and these hackers are incredibly intelligent. You're going to, as we continue to move into this revolution that is blockchain, you're going to see more and more of this. Hopefully the level of security continues to get better and better as well. So we see less of it and we can see less articles about it, whatever. But I thought this was actually a pretty crafty little move.
It's always going to be getting better, but we're always going to continue seeing hacks because companies are always, these are cutting edge companies, right? These are at the forefront. This is not like, hey, this software or these concepts have been around for the last 10, 20 years.
That's a good point.
We're just making small modifications to make it better, right? We're not creating the next Facebook. They're using cutting edge technology, and there's always going to be exploits, but it will get better. It always gets better. It's just,
you know how things work on the back end, Crusader. You know, doing the programming and things, you guys have bugs and fixes that need to happen all the time. You can have something laid out very straightforward and be connecting it to something else or trying to make a couple things work. And there you have the code on how to do it. You know what you want it to end up doing. And then somewhere in between the two interacting with each other, something happens and you don't know until effectively you see it or you figure out there's a problem, right? And so effectively, is that what's happening here where they push it out, boom, it's out there, and then realize, oh, we did not think of that.
Yeah, it's one of those things where like there's a lot of, you know, when software is a lot older and you're running through those same frameworks and all these things that have been around for a long time, then it's safer because there's a lot more examples of what you can go off of, like, hey, how to avoid certain issues. But when it's cutting edge technology with blockchain, all that stuff, and creating smart contracts and the different protocols, there's always some gaps that, you know, because the problem is, like you said, right, when you're connecting two different things, you have expected behaviors are supposed to happen when person A or person B does something, right, with one object or the other.
Yeah.
But there's always room for an unexpected behavior to occur when an unexpected action is taken by a person interacting, right? So you have to, that's always a problem that it's hard to foresee. You try your best to cover all your bases, and most of the time you can. But there's always risk that there's something that you didn't expect someone to do.
Yeah.
And then it brings an unexpected response from the program.
It's life in general, man. We build houses, and you've done it how many times? And inevitably, somewhere, some point during one of the jobs, something, all of a sudden people are scratching their head saying, wait a minute, what happened here, right? And it was a series of events usually that led to, or just a very weird circumstance at this particular job site that caused something to happen. And so I can see it absolutely. That makes a lot of sense as it relates to blockchain as well. Well, one of the things, first of all, smash that like. We got 50 people in here. Hopefully everybody is doing well today. Love to see the chat going. Just a reminder, if anybody wants to do a call in, you can do that on Twitter. You can let us know your name over here, and then we'll say hello to you at some point during the stream. So just reminding people, we are still willing to and wanting to do that. If you want to call in, we'll do it that way. Yeah, so moving forward, Arbitrum is one of these assets that I just don't really know a lot about. And people have been talking about it a lot. So there's a lot of whales apparently that are holding this. 23 whales hold over $1 million in Arbitrum. They've been buying or selling Arbitrum tokens throughout the last week, as the numbers look on chain shared demonstrate. 3 whales decided to sell over 22 million, while 9 others collectively bought 12 million tokens. Okay, interesting. During the past 7 days, 3 whale accounts sold around 22.8 million tokens, amounting about $38 million. $38 million. The sale prices were $1.37 and $1.69. So when it's large whale movements like this, Crusader, a lot of times these big players either have information that you don't have, or they have tax obligation. Because I was looking at the timing of it right before tax loss harvesting. When you're dealing with big money, it doesn't take a huge move in an asset price to be valuable. We've talked about before how if you bought $1 million worth of USDC at 99 cents, it jumps back to $1. Boom, 10 grand, right? So when you start getting into these larger numbers, things can happen quickly. So are you looking at any assets, Crusader, right now? We talked a little bit about altcoins earlier today. You were asking if I was currently getting anything. Is Arbitrum something you've been looking at? Are there any tokens that you've been kind of having your eye on recently as we move towards this next cycle?
I mean, for sure, I tend to stick to the ones that I know a lot, and I double down on the ones I've had before in the past. But there are some new ones, right, that everyone's talking about that I'm keeping an eye on to see how they play out, right? If there is this next big drop that we're expecting to happen or not. Maybe scoop some of those up there, reduce my risk, a lot less money to pick up a lot more coins. So Arbitrum is one of those. Optimism is another one.
Yep.
And there's Conflux is another one that I'm looking at. It's probably the equivalent of the Kami V chain at this point, from what I understand.
Hating on all my tokens, bro.
Yeah. I mean,
XRP, V chain. I mean, I'm just the communist over here. Just Keeper the communist. I'll change my name to Communist Keeper.
I'm just saying, Conflux is also involved heavily in the Chinese sector, so that's why I'm saying that.
Well, are you concerned? Do you get concerned? So we're talking about whale movements with Arbitrum. Yep. Do you get concerned when you see big movements like that in a small token, or do you think it can be a good thing?
It's one of those things that's kind of a wash. There's always going to be massive whales, especially when there's like airdrops, right? That happened with Arbitrum, and everybody got a ton of money. When you start getting free money, there's always going to be whales, no matter what coin you're in, right? Cardano has whales, Ethereum has whales, Bitcoin has whales, every coin has whales, and it all really comes down to the fundamentals of the project. If it's really truly a successful project with true fundamentals, the whales will hang on. It'll be easier to navigate the whale movement. But if it's just a pump and dump meme coin, right, like we're going to be talking about here pretty soon, Pepe, that's more unpredictable. That's very concerning, right? Dogecoin as well, massive whale movement, massive. Just the price fluctuates too quickly to get in and out of sometimes.
Yeah. The one of the things that people, obviously, when they're moving these tokens around, that people used to like to do was to kind of obfuscate their movements, was Tornado Cash. And Tornado Cash had been in the news quite a bit, and then out, and then in. We just got some new information on Tornado Cash. It's basically saying that OFAC has more than overreached and legally is doing what they should not and are not allowed to do. I want to get into this. So how OFAC's Tornado Cash sanctions violate U.S. citizens' constitutional rights. 6 individuals who fell victim to their sanctions are fighting for their rights in the Van Loon versus U.S. Department of Treasury. Last week, to assist the court in fully understanding the broad implications of these actions, Blockchain Association and DeFi Education Fund filed a friend of the court, brief arguing why privacy is a fundamental right that should be protected even in the digital realm. And I agree with this so much. Listen to this. There's a little bit here, but it's important. Tornado Cash is a self-executing computer software published on the Ethereum blockchain that allows users to maintain their financial privacy while using blockchain technology. Unlike a bank's ledger, blockchains are public, permanent, and maintained through a decentralized network of computers. While transactions on blockchains are publicly viewable, the user's identity is not identified as transactions are linked to public keys, which is similar to an email address. An individual's desire to keep their transactions away from public view is more than reasonable, given how much information our blockchain transaction history can share about our lives. And then it kind of talks into like, let's give you some examples. Donating to politically charged causes with crypto, paying for private medical procedures, or purchasing certain religious or personal items. Tornado Cash allowed users to protect their privacy, all while retaining the benefits of transacting on a blockchain. So effectively, they're saying their authority extends to only persons or property. Well, Tornado Cash isn't a person. Tornado Cash isn't a property. It's not owned by anybody. It's not controlled by anybody. It functions automatically without human intervention. So their OFAC's overreach in sanctioning software goes beyond its legal purview. I couldn't agree with this more. I think the Tornado Cash is such a great thing. Listen, you're always, and we've harped on this a lot, you hand somebody a pew-pew, and the vast majority of people are going to use that appropriately. They're going to be a law-abiding citizen. And then there's people that aren't. Now you introduce a computer software that people aren't making. It's literally computer code. It is software that people are executing transactions on. And the majority of people, hey, I just want to keep my privacy. The majority of people are not out here selling drugs and selling, human trafficking, right? They're not. They're just not. And so the idea that Tornado Cash is only used for that, and that's why we're going to sanction effectively a computer code, I think it's absolutely wrong. They need to figure out they need to do their due diligence and figure out who are the bad actors. What are they doing? How do we do a better job on our end to protect from that? Not protecting by just shutting down a computer code and effectively saying, hey, listen, we're stifling innovation. We're slowing this down. Got to pump the brakes. No freaking way. What are your thoughts?
Yeah, dude, I completely agree, right? I mean, the problem is this is a lazy way to pass a blanket law that, really restricts a lot of people because, the same thing that you were just saying, it's just a tool. How people use the tool that's your job. Your job is to figure out, hey, this tool exists. Now, when somebody uses this tool incorrectly against the law, then we go after them. Not just, oh, this tool, somebody might use it the wrong way, the way we don't want them to use it, and we got to just take it away from everybody else, right? It's the same thing how you mentioned drugs, right? Drugs are illegal, yet they still have business running. Business didn't stop, right? Same thing with the Second Amendment, all these stuff. Like, you getting rid of it isn't going to stop bad people from going after it and still using it. So, even if they made Tornado Cash illegal, okay, cool. Nobody can use it. Drug lords and bad people are still going to use it. Like, they're already in the game of being a bad person going against the law. So they're like, oh, a new law that I can break? Awesome.
Sweet. Yep.
Right. +1 on my record right there, baby. Let's go. Smash those likes. Like,
yep.
It doesn't affect them. They don't even think about that. Like, it only affects the good citizens that are trying to use the tool for their own good, trying to use the tool for self-defense, trying to use the tool for privacy, trying to use the tool for legal purposes. Yep. Those are the only people affected.
I mean, bottom line, dude, the reality is really simple. This has been an argument in a lot of other, we're not going to get into those, but in a lot of other it is such a commonsensical thing to 1 + 1 = 2. Law-abiding citizens are going to follow it. So now you've sanctioned it. We can't use it. Guess who's not using it? Crusader and Keeper aren't using it. Would we like to use it? Sure, but we know that we're not willing to risk our freedom to use this, okay? But we're not doing it because we're not criminals. The criminals are exactly what you're saying. They're still going to use it. It's still there. It's not like you don't have the ability. It's not like they shut it down from a standpoint of dude, it's open source.
And guess what? They're still not going to go after them. They're still.
I know they won't. I know they won't. It's just to slow down. It is full on about control and taxes. That's what it's about. They want to make sure that you have no physical way to listen. If you're trying to hide from the tax man and the laws say that you have to pay taxes, you are the one that should be paying the price for that. You are the one that should be in trouble for that. Not all the people that are using it for good or just using it just to maintain their privacy. Like those examples that they used. Obviously, Crusader, obviously big donator to the Democratic Party, right? Definitely, large on the liberal side. So he doesn't want people to know that, right? And so ultimately, things that people do in the privacy of their own home should not have to be because it is on the blockchain, right? And ultimately, if I don't want you to know that I'm a liberal, nobody wants people to know they're a liberal. So you know what I'm saying? We're probably gonna get in trouble for this one.
It's just wild. It's just, we already have the Patriot Act, right? They had all these justifications to monitor, and the more digital we go, the more excuses they look for to be able to overreach into your privacy and continuously monitor people more and more and more. And it's just control, man. It's just like it just boils down to that control, taxes, money, keeping the debt slavery alive and well, right? Anything that disrupts the business of debt slavery is a threat, and privacy is one of those things.
For sure. And Jug, we'll pray for you, brother. It's a fantastic idea there. Actually, it's a terrible idea. And if I could zoom out, that would be really nice. There we go. Okay, have me zoomed in. So yeah, so
let me know if you're looking for any investors.
talking to Juggernaut.
Yeah,
Jug, we got some extra ETH sitting around right now. I'm trying to do
some capital investment to get the business running. I'm trying to get into the venture capitalist game.
Oh my gosh. Yeah, we are VCs in that arena. No, listen, YouTube, we're kidding. Okay. All right. So there's other things that are happening in the space that is, overreach and basically being addressed in the public forum, especially in politics. And one of them is with Polygon. Polygon is, if you ask me, this is one of I mentioned this earlier to Crusader. Polygon's one of the assets that I'm looking to really stack up on. We've got some right now, but I really want to stack up on Polygon before this next run. And there's been some stuff surrounding Polygon that we're going to talk about right now. Polygon Labs publishes open letter addressing the EU authorities, proposes better DeFi regulation. So check this out. So there's been proposed amendments that are designed to exclude 100% permissionless technologies and their creators. For instance, open source contributors, something like we were just talking about, from the scope of data regulation. Instead, this document will focus on permission distributed systems that can be controlled by a business entity or individual. Developers of permissionless systems, on-chain or non-custodial services, should not be held accountable for the processes and activities their code might be used in. Louder for people in the back. Should not be held accountable for the processes and activities their code might be used in. It's exactly what Crusader and I were just talking about, right? But here's the problem. Regulators need to clarify some of these definitions. So data, for one of them, they've been asked to narrow the definition of data. As smart contracts operate in fully permissionless manner, no one can be charged for possible data abuse. As such, crypto asset services provided in a fully decentralized manner should be excluded from the scope of this data act, right? They're basically fighting to say, and Ledger, obviously, that produces hardware wallets. We have our link down below the stream. If you're looking to BYOB, check that out. Took part in preparation of this letter. They are fighting back. They're saying, listen, enough is enough. You're not giving us any clear foresight into what we can or can't say, do, use, whatever. And then you're dropping the hammer on effectively data and information because people are using it in a certain way versus dropping the hammer on the people that are using it in a certain way. And it's going to be a problem, man. We're going to push people out of the United States, which is already happening. We're going to talk about that a little bit. Yeah, Coinbase. I don't know. I just see this continuing to snowball until somebody steps in and makes a change. I don't love the regulation just as much as anybody else, but at the same time, if we're all going to play ball, let's have a set rules. If there's no rules in basketball, trust me, somebody's getting punched in the mouth and they're going to take the ball and run down without dribbling. They're going to jump up and dunk it. Like if there was no rules in basketball, it would turn into a massive fight. It's the same idea here. We don't have any defined rules. So how do I play the game? What can I do? What can't I do? And I think it's that simple. We need to have some sort of clarity as for what we're going to do. What do we do? How do we do this?
Yeah, I mean, it's not my preferred method either. I like the wild west, right? Where people had the cojones that just do what they want to do and then deal with the consequences, right? Like if, hey, I'm setting up a business, there's no regulatory clarity on what I can and can't do. I'm just gonna do whatever the hell I want. And then when the time comes, be like, hey, I'm gonna fight it to the end because you didn't tell me in the first place. And a lot of companies don't operate that way anymore. Right? Everybody likes to play it safe. So unfortunately, we need clarity for these big corporations to really jump in. I mean, even with the lack of clarity, we still have institutions coming in. That's why they stick to a lot of like the futures and derivative stuff when it comes to Bitcoin and the services that they offer, is because it's a lot easier to do it that way. But a lot of innovation is being derived out of the United States. A lot of innovation is going out to other countries, Singapore, Dubai, El Salvador, and many other countries, right? Even Hong Kong right now is more crypto friendly, I believe, than some of the stuff that's happening here in the States. So that's just doesn't look good, right? The US dollar is already in trouble. You already see cryptocurrencies as a threat to the dollar, and you're going to push the innovation abroad to foreign countries that can use this innovation against you.
Yeah.
Like, come on, dude.
I mean, think about it, Crusader. Part of our business plan with Danger Close Alpha that we've talked through, which, by the way, as always, this show is sponsored by Danger Close Alpha, dangerclosealpha.com. Jump into the Discord. We are still doing a whole lot over there, giving away Ethereum. Lots of cool stuff going on, and we're still selling the bullets, beans, and bourbon. Those are 0.01 a piece, so check them out. They're on OpenSea right now. Part of our plan is as a business to move forward, and there will be a piece of real estate or multiple or whatever as it grows. Well, we've already talked about it. We legitimately, to do that right now, we would have to have an entity outside of the United States. Why, as law-abiding citizens, should we have to hire an attorney, hire tax people, make contracts outside of the US, have an entity outside of the structured outside? Why should we have to do all that when you could do all of that in the United States, keep that money all in-house? They could still even have more control over some of the things that because at that point you're outside of the purview, and that's all people are going to do. So when you shut it down, people are going to go the way that they know that they can go. And if they don't see that, they're freaking blind. So they either don't care, and I don't know which it is. They either don't care, or it's just the fact that it's inconvenient for people. Like we talk about convenience all the time. It pushes people to have to do something that most are either not going to do or don't have the ability to do, because it would take a lot for us to do what needs to happen in relation to what we were talking about with real estate stuff. Yeah, I don't know. It's frustrating though, for sure. We're talking about. We've got a video that's coming out this week for USPC, one of our partners, and it's explaining some things in the real estate game. We're excited to share with you guys, and there's reasons why things are set up the way that they are, and it's tough right now. It just really is freaking tough.
Conspiracy time. Here we go. See, I muted myself. See, what I think is the puppet masters behind the scenes are pushing this narrative. They're pushing this agenda to make people leave, right? The less people, the
I can't take you
easier
serious.
to
I can't take you serious the whole time.
Can you take me serious now?
Oh, now I'm scared to death.
So I think they're trying to push people out, right? And the more they push out, the easier it is to control, the easier it is to pass regulations, and really lead the U.S. into what China has become, which is a police state. That's overall I think their main goal is that, right? Is take the biggest powers that are in control, knock them out, and then make sure that they are now the police states of the future, because they have the power to do it.
Yeah, for sure.
That's dystopian future, but it's a possibility that I just don't see any other reason for them to do this. Yeah. Right? They're not dumb. They know what they're doing. It's not like they can't read what the writing on the wall. Right? If you and I can read it, right? The people on the YouTubes can see it. You're gonna tell me these PhDs, these professional economists, and all these other people that are hired in the government that are whatever don't see it?
Yeah. I think that in a lot of ways they are just plain old stupid, but I don't think that it's actual. I don't think that it's actual ignorance as much as willful ignorance. It's being willing to just push their agenda,
being paid
no matter
to look
what.
the other way.
Yes, no matter what, we're pushing this agenda, and that's what seems to be happening. We don't have an article pulled on this, but we put on the thumbnail something regarding Coinbase leaving the U.S., and this could be a great example of what we're talking about right now. It would be a massive thing for Coinbase to leave the United States, right? So, Crusader, you brought it up to me earlier. Why would that even be something that Coinbase is talking about?
Well, because of all the fugazi and nonsense, right? They as a company, they want to innovate. They want to, make new products. They want to provide new services to their people, right? Keep innovating. They can't just stay stagnant. There's plenty of exchanges worldwide that are innovating, that are producing different products, that are doing other things that people are interested in. The only reason why people use Coinbase right now is because it's the beginner friendly thing. But the minute people spend a couple of months in crypto and understand what they're doing, they're out of Coinbase. See you later, alligator, right? And they're just using it as an on ramp and off ramp, just ramping on, getting some crypto right out of Coinbase. See you later. We don't want to use that product anymore.
Yeah.
So they need something. They need to keep innovating to keep people on their platform, and they're not going to be able to do that here in the States.
Yeah. They ultimately, the reality is, if they have, it's a massive company that's making, wild amounts of money off of fees, but that I think can only sustain so long. If that's all they do, and I don't know the numbers, so let me be clear on this, chat. Like, I don't know what these numbers look like, but if all they are is the on ramp and off ramp, they still might make fantastic money. But that's not ultimately what the goal is, to be so much more than that. And if the United States isn't going to give them any set of guidelines or standards, or if they're basically saying, hey, listen, we are planning on coming after you if you do X, Y, and Z, and the solution is, with a massive company that has tens or hundreds of billions of dollars, to just go somewhere else, what do you think they're going to do? They're going to freaking
I'm going to use
else.
a bad example, but it's an example that people can understand. Right. Casinos don't want you going to the casino, buying chips from them, and then leaving the casino with those chips to go play in a different casino. Right. The casino wants you to go in there, stay there, and never leave there, because that's how they keep you. That's how they make the most money.
Yep.
Right. If you just walk in, get the chips, and walk out, and then go to the other place across the street because they have better services, they didn't really make anything off of you. Versus keeping you there, and they just keep pumping money out of you one way or another by using different products and different transaction fees, and different APYs and staking and or whatever, trading and shorting and losing your ass.
Yep. They want all of that for sure. And speaking of wanting everything, the moment y'all been waiting for, first of all, smash that like if you haven't already. I hope everybody is doing well on this Tuesday afternoon. We appreciate you for being here. Apple, many people are using an Apple iPhone or a MacBook or an iPad or whatever, right? Apple is a massive, one of the largest companies in the world.
The largest company.
I think it might be the. Yeah. So if it's not the, it's maybe the second. But at any event, I believe you're right that it is the. So why not take some more market? And let's go ahead and try to go up head to head against crypto. So check this out. How does Apple Card's new savings account compare to crypto? When I first read this headline, Crusader, I read this and I was like, how is the freaking savings account going to compare to crypto? But it's actually really interesting when we get into this. So they just released a new high yield deposit account in partnership with Goldman Sachs, and users are already excited that it promises a better rate than most banks. What about crypto and DeFi? Well, the feature that enables Apple Card users to grow their daily rewards, the cashback rewards for using the card, by placing them in a savings account that offers an APY of 4.15%. Check this out. Apple's rate is more than 10x the national average. Users can set up their savings account with no minimum deposits and no minimum balance requirements. For comparison, Coinbase offers 6% APY on staking certain assets, but we're talking about volatile crypto assets for which obviously some of the yield can be lost from token inflation, right? It's not a, no pun intended, apples to apples comparison. Apple's offering is more flexible and benefits from FDIC insurance, like we were just talking about earlier, while DeFi alternatives are going to be obviously uninsured by default. Now check this out. They don't have any hoops to jump through, right, to get an account. DeFi has other features, obviously, that they can deposit simultaneously, be used as collateral to borrow. There's some great things about DeFi, but the reality is this: you can put as much money as you want into this as a savings account. So people are going to say, wait a minute, do I want to sit here? And this is where it kind of combats with crypto. Do I want to take my crypto assets where, like, on, let's just say, like, if they're staking on Coinbase and they can get 6%, do I want 6% with the volatility, Or do I want to take a whole bunch of extra funds that I have, somewhere else and just sit it over here with Apple and earn 4.15%? I think a savings account, a regular savings account, is something around 0.5%, if that. I don't even know that a lot of them are that. I think 0.37%. I think 0.37%, I think, was like the national average or something like that. So effectively, why we're saying this could be combating crypto is because there are some nice APY opportunities in crypto, but crypto, again, is having these issues with no sort of clarity. And if they're able to offer a percentage that is close to that, now, here's the kicker. Here's the question for you, Crusader. Are they going to get pushback on doing this? Is Apple going to be able to genuinely offer a freaking savings account in which you can put as much money in there as you want? Obviously, 250K is still the FDIC rules. Are they going to be able to, because everybody else was getting pushback, and I don't know if it's just crypto or if they're saying, hey, you know what? You're going to be able to do what you want to do when you want to do it because you're Apple. Are they going to get pushback from this? It's 4.15%.
So.
That will. Why would you not take your money out of a savings account and go put it? If you have a savings account right now, it's doing nothing. Yeah.
There's literally been with other articles talking about how there's almost a mini bank run happening. $60 billion have been pulled out of 3 U.S. banks running to the Apple thing, right? I don't think they're going to get pushback. I think they're well connected. They have really smart, and they knew what they were going to do before they did it. And I think they are the chosen ones. Like, they are the largest company. What government is going to tell the largest government, hey, we don't like what you're doing, get out of here? You know how much business they would lose, how much Apple phones, just I mean, it's something people would riot about. It would be about their phones. If they can't get Apple devices in the United States, or Apple devices prices get too crazy because they get pushed out of the United States, that's definitely something people will riot about. People won't riot about anything else. People don't care about their freedoms being taken away, but take away their phone, and we're going to have problems.
And find out. Yeah, for sure.
So I don't think they're going to get pushback. I think they know exactly what they're doing. And I think they're just getting started. I think that this is the catalyst event for them to start pushing into crypto, because what else gives massive APYs? What else gets people interested? What else can provide them with a huge revenue of money?
Yep.
Crypto, right? If people start using their platform for fiat for 4.5% APY, they're like, wait a minute. People are interested in making money. We make money. Hold on. Now we already got them. We got them sitting there with the fiat in our accounts already. Yes. Now let's just start introducing a little bit of dogecoin, a little bit of this, a little bit of that, a little bit of this other thing, and people start buying.
Yep.
Bam. Now Apple becomes the largest bank in the world, one of the biggest crypto exchanges in the world, and they are the massive competitor. And they work with the government, so they're going to be selling all your data right back to them.
Dude, perfectly stated. And one of the things that I was actually told last week, so I'm 38 years old. I'm in no way what's the young generation? Are they Gen Z?
I think it's there's Gen Z is the
are they millennials?
Up and coming. No, we're millennials. The up and coming generation, like my sister's generation, and some people are younger, they're Gen Z, but there's the new generation, which I think is Generation Alpha. Those are like the babies, like your daughter, my daughter.
Well, so I'm thinking about the generation that's 16 to 23 or whatever.
Yeah, Z.
Okay, Gen Z. Okay. So it was brought to my attention the other day that it is not cool for Gen Zers to carry debit or credit cards. They literally do everything on Apple Pay or whatever other digital. Everything's digital. And so I have been using Apple Pay more and more because it's freaking convenient. Now, exactly what Crusader was just saying. So, okay, let's say people stop carrying cards, which, newsflash, that will be happening before too long. All of these machines at some point are going to be touch your phone or your microchip.
Carrying a wallet is dinosaur technology.
Yeah. So this is what I do. So I have a phone. It's thick, right?
Look how much space that takes out of your pocket. God, Gen Zs can't take that, bro.
I know.
Not with their tight, skinny jeans.
So my wallet is attached to my phone. That's going to be a thing of the past. Now introduce the idea that people can hold all of their money within that platform. So my money's now with Apple. I'm making a 4% yield. And oh, by the way, what's this? Get introduced to crypto, just like they did with Venmo, just like they did with Cash App. All of a sudden, people are like, well, what's that? And then people are asking questions. And now they don't have to actually do anything. It's going to be boop, 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 boop. Oh, that's pretty cool. I like that you can do that. And all of a sudden, is Apple taking over the world? Now, here's the conspiracy theory on my side of things. With Apple being the largest company in the world and diving into every single facet of our lives, including obviously data aggregation and just controlling everything. Now we're having a banking crisis. Okay. In steps Apple. They offer this APY that's on fiat that is insane. If you look at, overall, it's almost competing with the 3-month bond market or treasuries. And so now they step in, and what happens? Oh, a bank run is happening. Like you said, there was tens or hundreds of billions, whatever the numbers were, 60-something billion dollars that's running and flooding into Apple. That news gets out there. Everybody starts flooding to Apple. It causes the banking system to effectively collapse. People are now all of a sudden or a mass majority of people flooding into Apple in that one quote unquote safe space. And then all of a sudden, guess what? It makes it easy, nice and easy. And guess who they partnered with? Goldman Sachs. You're right. So now Goldman Sachs is in bed with Apple. We have all of our people corralled nice and neatly. We're making, yes, you will be a citizen of Apple. And effectively, when the CBDC comes out, nice and clean, crisp, easy. We know where everybody's at. We have all their information. Their phones with them. They've got to have their phone. At that point, their phones with them. They got to have their phone with them because we're not microchipped yet, right? And they have all in the same place. You never leave your phone. You now have all of your money on there. You have the assets. You have crypto. Apple takeover. And I could see it being that push
100%.
when we move to CBDCs to make it corral nice and neatly. And it's something that they can point at. And it's not a governmental issue, right?
It's the long
Apple
game.
did this. Apple, they could point, but they could have the deals already set up between the government, between Goldman Sachs, between Apple to say, hey, listen, you're going to be quote unquote the fall guy, but you're going to benefit massively from this all the way around. And you're going to be, we got you.
It's always the long game. It's always getting the younger generations prepared for what they really want, so that younger generation grows up thinking this is normal, and they just go along with it. There's no resistance because you just haven't grown up in the world with seeing those things and using those tools and saying, "Yep, this is the way it's always been." Right?
Yeah.
People are not aware of history, and that's always the target.
Yeah, and they're the younger generation. Shoot, even people in other countries. I have somebody I'm close with over in Brazil, and she was telling me when I told her I had to go pick up a check from a customer, her mind was like blown. Like, checks? You guys still do checks? Like, is that really a real thing? And I get it, but to me, it just seems like such a simple idea. We are all moving 100% wireless, digital. Just we're moving into this digital age at a fast pace. And if Apple can step in and not only be who they are in the technological space, but now they're your bank, it's going to get wild quick, and you better strap in. I could see this being the next step towards what the last comment was. Demolition Man.
That's right, man. That's why crypto's so important. That's why people need to understand what they're doing with crypto. Be your own bank, have custody of your own funds, and not trust any of these centralized platforms, even if they try to give you 4% APY.
Yeah, for sure. So smash that like if you haven't already, crypto fam. Listen, it's Tuesday afternoon. We love each and every one of you. You could be anywhere, but you're hanging out with Debate Crypto. Hopefully you guys enjoyed the stream. As always, we're here Monday through Friday, 3 p.m. Eastern Standard Time. That's not going to stop. Again, next week, Consensus, come out and say hi. I'll be out in Austin. If you're around the area, would love to say hi to you. Crusader, I'm whipping Crusader and making him stay back and hold the stream.
Somebody's got to work around here.
Somebody's got to work. Keeper's got to travel. So yeah, look forward to the rest of this week. Make sure that you stick around 3 p.m. every day. Like I said, just remember, question everything.
Trust nothing.
And until next time, hodl
like it's hot.
We'll see you soon.